I think for each, be it as a trader or investor, there are several things like you can look out for. For example, first, understand your risk aversion level. Are you a big risk taker or you can't take much risk? So actually in the financial market, there's this rule of 100. Alright, so which means that you take 100 minus away your age. For example, if you are 30 years old, you take 100 minus 30, which is equal to 70. That means you should put 70% of your money actually in more risky assets, like maybe stocks or commodities or currencies. Then you should, maybe you put 30% of your money into less risky investment asset classes like bonds or FD. Alright, but on the other hand, if you are maybe a 60-year-old lady, for example, you take 100 minus 60, that will be 40. That means you place 40% of your money in more risky assets like equity or commodities, while you put 60% of your money in bonds or FD. Also, it actually boils down on your risk appetite, and you as an individual investor or traders, you need to know your risk appetite. That's the first thing. Second thing is understand your time horizon. Are you a very short-term traders or are you a long-term buy and hold investors? You need to understand yourself well, and apply the so-called relevant trading or investing strategy accordingly to your time horizon. For example, like me, I travel around. I can't have my eye on the price of stocks or asset classes every minute or every second. So I tend to be a position trader, or I have a longer time frame holding period rather than an intraday or swing trader. Alright, so that's time horizon. Third, you need to equip yourself with the necessary and correct knowledge. That's very important. Alright, because without any correct knowledge, you simply plunge into the investment or trading, or most likely the outcome will be you'll be burned and you'll be suffering a lot of losses. Also, the fourth thing I can think of will be you need to be in the right environment to accumulate your wealth. If you know this gentleman, Anthony Robbins, he always say this. There are actually two things that affect your life. First is the books that you read. Second is the kind of people you are in touch or the environment that you are in. Alright, so you need to be in the right environment with the right people of the same mindset, that you can push each other to achieve the same maybe financial goal. Then for the fifth one, you need to have a plan or a roadmap to help you build your wealth. A very good example would be there's this well-known so-called rule of 72 in the financial market. It actually tells us a time taken to actually double your so-called capital. For example, if your rate of return per year is about 10%, you take 72 divided by 10, it will be equal to 7.2 years. That means if your rate of return per year is about 10%, you will take about 7.2 years for your capital to increase. Maybe you start with 100,000, you will need about 7.2 years to so-called increase to double to 200,000. If you feel that it's too long, 7.2 years, then what you can do is you actually increase your rate of return to maybe 12%. You take 72 divided by 12, that will be 6. That means you only, instead of 7.2 years, you actually take maybe 6 years to double your income. But one thing I want to say is this. Financial market is not always in the bull market. There will be time when there will be bear market. So that's why if you want to be successful as a trader or investor, one very key important idea is you must learn how to do short sell. Especially during bear market, you need to know how to do short selling of maybe stocks, equities, so that even though as the stock prices drop, you will still be able to make money through short selling. And through short selling during bear market, then maybe from there you can still maintain your maybe 8, 10 or 12% rate of return. Then with that, you'll be able to follow this rule of 72, or to be able to double your so-called your capital within the based on your investment return. And then you can, based on that, you have a roadmap how to double or even triple your investment capital. Alright, thank you very much for your time. I will catch up with you soon.